The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the grain markets were extremely quiet on the day Tuesday, kind of that penny higher, penny lower type of trade across the board as the onslaught of harvest is settling in. Livestock was the star of the show, though, on Tuesday with triple-digit gains there. We're watching the outside markets with the Fed meeting this week and more. Let's take a look at what's going on in the market trade. Joining us for a conversation, Jim McCormick with agmarket.net. Jim, it's great to talk to you again, sir. How are you doing?
Hey, good afternoon, Jesse. Doing quite well. I got to say, I'm here in Northern Illinois. Man, it doesn't feel like the middle of September. It feels kind of like the dog days of summer. It's warm, it's dry. Crops are drying out. A few guys are starting to try to scratch a little bit, getting a little beans out, but harvest is coming upon us quick.
Very, very true. Well, and some of that heat has maybe helped finish some crops off in some areas that were lagging behind a little bit. And I know some of the early yield results I'm hearing from the Eastern Corn Belt have been quite good for quarter beans. Markets I mentioned on Tuesday, grains, man, oh man, it was like watching paint dry. It felt like across the board. Not a lot of action, not a lot of fresh news. It kind of feels like these grain markets are in that lull period as we enter into the onslaught of harvest, Jim.
I think you nailed it. We are definitely in kind of a wait and see mode. I think at the moment, Jesse, the funds have done a lot of short covering the last couple of weeks. They were carrying a record short for this type of year, folks, and they've lightened up. They're still short, but they're probably carrying more of a quote unquote reasonable position into what should be a record crop. So I'm not sure if they're there to propel the market higher. The end users, your other kind of traditional buyers, Jesse, they see really no reason, I believe, to chase this market at the moment because we've just begun harvest. We're 10% harvested. That's it. And they know, unfortunately, 90% of this year's crop has not been sold by most estimates. We can only store about half the crop on farm, which means about 40% of this corn is going to, and beans, both are going to come to market. It's just a matter of when. So it's kind of a waiting game. So the end users aren't buying it. And then, kind of on the other hand, the farmers are a little bit disappointed. They're not exactly thrilled with the current prices. So they're hoping to get a little bit more of a push higher before they sell into it. So kind of a little bit of just a standstill at the moment. And on the macro picture, a lot of the fund traders and just your day traders, they're all kind of hit the pause button today, I believe, as they're waiting to see what the Fed's going to do. I think everyone's convinced we're going to cut rates, but is it going to be a quarter point or is it going to be a half point is the big argument at the moment.
That's a good thought there too. And if I've wondered this, have we seen some money, some of that fund money maybe move out of equities in anticipation of what the Fed's going to do? And maybe some of it has gone into commodities. Have they maybe, as they started to cover some short positions, have they felt like maybe that's a safer play at the moment, potentially?
I'm going to argue, Jesse, they got out of a lot of stuff and they just went to the sidelines. And what I mean by that is, as of last Thursday, the week-to-week calculation, $23 billion, that's with a B, $billion went into money markets. They get a total of $6 trillion in cash right now in the money markets. So a lot of money has moved to the sidelines, but it's going to get interesting to see what happens now because those money markets are making a little over 5%. But if the Fed comes in and cuts rates like a lot of people think by half point, all of a sudden those money markets aren't going to look quite as attractive they have been for the last year or so. So essentially that might finally force some money in to start looking at new investments. Will they continue to buy the stock market? I think I saw some stat today, Jesse, that said when the Fed cuts interest rates, when stocks are all-time highs, a year later, all 20 times they've done it, the markets were higher. So It's going to be interesting to see, with this cut in rates, what it does with the money. The one thing that may be friendly commodities and agriculture products specifically is if they do start cutting rates, the dollar more likely will go weaker as it will not be attracting as much money. A weaker dollar will help stimulate demand, hopefully.
It feels like in these grain markets, I know we got the quarterly stocks at the end of the month, harvest. We'll be getting a lot of those yield results and more. It feels like maybe we're getting a little range bound. I think we got some support near the 20-day in both D's corn and November beans, and then that upper Bollinger Band, if you're a chart watcher, at 418 and 1030 or corn and beans respectively there. It's kind of that next leg of resistance. And then in the wheat market, $6 kind of feels like that area of resistance. And I'm just not seeing anything right now, Jim, that's going to work us out of this kind of range bound trade, barring some crazy headline here.
I would guess, yeah. And then I would guess, I think you're right. And the next big target will be that September report. But mind you, that is September 30th. That's, so that's a lifetime in the grain markets as slow as they're trading. Now, I do think that quarterly grain stock report, Jesse, is going to be a little bit interesting. I mean, and we'll see. But like on the corn specifically, there seems to be a lot of corn moving. I mean, I've talking to people, customers of my clients of mine in Indiana right now, that there are still farmers out there, unfortunately, delivering corn, but it's last year's corn. It's not this year's corn. So you begin to wonder, with all this corn that's coming to market, is there a probability that last year's corn was understated? And then they might actually find bushels on this report. Now, I wouldn't be shocked if that's the case. I mean, sometimes it takes a year for the government to get their hands on what's actually out there. And I'm a little bit leery of a potential bearish surprise just based on the amount of grain that's moving in the east this late into old crop and essentially now moving to new crop marketing. Pretty amazing.
Yeah, very, very true. Let's look over to livestock and talk about that real quick too, and kind of the backdrop of Tuesday's trade. As I mentioned at the open, that was the star of the show. Some triple-digit gains in futures. Felt like good support there. This cattle and hog market, all of it lumped together, has kind of been curious though as of late. And I know it's been tied closely with stocks and equities. I mean, what's your perception of this protein sector here, middle of the month of September, Jim?
Right now, I think it's all about positivity and positive demand. Stock market is trading at all-time highs into this Fed cut number. But I think what really got it excited today was retail sales. Retail sales continue to be stronger than people think, which shows us actually, Jesse, the consumer continues to spend. Despite the fact a lot of rhetoric that maybe they're going to pull back, the trade is looking for the retail sales to fall. They increased, and the trade just took that as that's a good sign. At this point, the consumer is willing to spend, and when he's willing to spend, he tends to go out to eat and drive that beef demand. And like I said, on the other hand, a weaker dollar due to the interest rate cut potentially could drive the dollar down, and that could also bring in more export demand for the beef and pork as well. So both good signs today.
Yeah, both good signs. Well, thinking about that demand picture too, that's something I know you and I have talked about quite frequently in the past. And whether we're talking grains or livestock, that overall export demand picture is one that really we have a lot of supply in many cases, particularly grains, and not necessarily enough demand. And really, it feels like to get us out of this down cycle, we're going to have to find some more of those demand avenues, right, Jim?
There's no doubt about it. I mean, right now, especially in the grains, if we end up with a good crop and Brazil follows up with a good crop, the fact of the matter is the world is oversupplying itself with grains at the moment, especially with China's economy. Because China's economy, unlike a lot of the other economies of the world, did not snap back after COVID. They've been struggling immensely in their property sector and other markets. There's a lot of discussion, Jesse, in the economists that they could actually go into deflation. And no one wants inflation. Because inflation, we know what happened here. When they got 8-9%, it really hurts. And things are definitely a lot more expensive than they were just 2-3 years ago. But, economists fear is deflation, because when you get into a deflationary spiral, people say, hey, I'm not going to buy that product today because it's going to be cheaper tomorrow. And then it becomes a spiral. People get laid off work. And just if you want to look where that leads us, look at Japan, Jesse. They went in a deflationary spiral. And when you Google Japan's economy, what's the headlines? The lost decade, if not decades, where their economy struggled. So the Chinese are in a very precarious point. Can they pull this economy out of it? And, as much as Americans say we're competing with the Chinese, the reality is that you're in American agriculture, we are kind of needing China to pull out of this economic malaise, because if their economy is growing, they're feeding that population. They're buying our beef, they're buying our grain to feed their pork industry. So, a lot's going to ride on if they can pull their economy out of this malaise.
Well, Jim, as we wrap up here today, I appreciate the insight and the thoughts as always. What do you want producers to remember right now as we navigate harvest and we navigate this market picture? And to your point earlier, a lot of folks not happy with the price environment. I mean, what are some things they need to be thinking about in terms of their risk management right now?
I think right now the nearest thing you got to decide is, what are you going to do with the bushels you can't store? I know a lot of guys, Jesse, they know what they're going to do with the bushels. If it's not marketed, they're going to put it in their bin. The next decision is going to be, if you cannot store it, what are you going to do with it? There's a lot of economic incentives. Do you want to sell it right off the combine? Do you want to pay commercial storage? There might be other alternatives that's cheaper than the commercial storage. What I'm going to tell everyone is do the math, do it now, maybe when you're not super busy and super exhausted, and come up with a game plan. So, when those bushels are harvested, what are you going to do with it? Not just go to your default. Well, this is what I always do, because what you always do may not be what you've always done, may not be the most economic, pragmatic means this year. So make sure you look at your options.
That is a good thought to think about and keep in mind. And if folks have questions, of course, I know they can reach out at agmarket.net, give you guys a phone call, take a look at your online materials, analysis, and much more. Jim McCormick, agmarket.net. Always good to talk with you, sir. Thanks for joining us today. Appreciate it.
Thanks for having me on.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.